What is going on, everybody? Welcome back. It's good to be back. It is Tuesday, September 2nd, 2025, Trading Trends Edition. Covering ETFs today. We'll recap the day, the week, as we, summer is, technically, I guess not over. You got a couple weeks, but it was, sad for me. End of Labor Day night is like the saddest on the calendar. It's like mourning for me. But football does start on Thursday with greatness with my boy Jalen and Saquon touching the ball, and that kicks off the season. But other than that, I got to learn how to love fall. Not really a big fall person. Summer is wonderful. So much just fun. So much fun. It's just ice cream cones and go to a concert every week. It's just very fun. Okay, let's get into the market. The market today, not so much fun, but we'll recap what's going on. And all that. So today, really, the story belonged to the yellow metal. If you own commodities today was the day for you. Gold ran up 2% to new all-time highs. We'll take a look at that chart. It'll get your juices going. And also silver to new 52-week highs. For you guys that like the catch-up trade, silver is catching up to gold. Like I said, gold all-time high, silver just 52-week highs. Room overhead here, as well as a biotech and oil caught a bid up 3%. It's talking about catch-up trades. Biotech used to look awful. Now XBI looks. We'll take a look at the chart. Spoiler alert. And oil, we'll see. Energy was on Spaces today, and Jason, from All Star Report was, kind of pounding the table softly. He said on energy here as it's basing. We'll take a look at USO, and I think he could be right. Okay, let's get into the charting with the intradizzle and all that business. If you have a ticker or something, click it, type it in, and I'll take a look at it. So it's been as the children say. So really fast, SPY, which we'll get to a little bit in depth, was down 75 bips today. Q's down 85. It was a nice rebound towards the end of the day for sure. We'll take a look. NVIDIA down 2%. Tesla down 1.33%. Baba bucked the trend up about 2.5%. Gold, like we said, up 2.33% to new all-time highs. Apple shed 1%. Amazon down 1.5%. Robinhood down 3%, although it was down much more. And IBIT, it depends on the ETF, but IBIT today was up 2.5%. We'll look at BITO in a little bit. So as I get to the intraday chart here, we opened at around handle $38. We opened at, and then we started to sell off here. A lot of tariff fears and rising rates, more so the rising rate fear globally. You had some crazy yields globally. Rates did make a big move, and we'll talk about that a little bit through the lens of what equities did. But we bottomed at 11:30 a.m. at 6:35 SPY. And then a nice rally. They really bought it continuously throughout the afternoon. At 1:30, really got its legs underneath it when we recovered VWAP at 6:38, which is where we opened the morning. And a nice little lift off. I know we ended down 75 bips, but for me, that is absolutely fine if you call that a digestion day, because you see nice candles here towards the end. 2:30 really, and then it was 6:42 essentially close here. As I zoom out, it's been a little bit since we spoke. Here's the SPY, new all-time high struck on August 28th at, called 649.5. My view here is, like I said before, I kind of had, I think last I said, let me see my notes here, around a distribution bearish phase would end on or around September 4th, which is this week, on or around 640. So we're at 642. The market, though, is this, like I said, look at that candle. I saw a hammer that looked just like this over here on August 20th, and it sent us 8 days later to new all-time high. So I'm a believer in this market. It looks strong. We had a bearish confirmation here. When we had that all-time high on the 28th, you didn't even get to 66 RSI. So I thought some, air could come out from that pocket underneath. And we quickly revisited our 21-day exponential at 641, pretty garden variety. Everything seems normal here. I still think for the next 2 weeks or so, I personally wouldn't chase the market, and I still think we hug right around 640. To me, the market here, the chart in terms of presenting the risk levels are very clear. Ugly sell-offs take you to about 625, which is 16 points or about 2% and change away. And then to the upside, it looks like the market could drag up to about 653, which is 12 points or just under just about 2% away. So pretty clear risk levels. And I do see a little bit of choppiness. You saw the VIX rise today I'll see if we take a look at the VIX chart, VXX, but it had a big pop to pretty much where we called it would have that dead cat bounce. It was up pretty significantly at one point today. Dollar VIX and VXX were, and then they still closed up positive, but not as much as they were. There's a great looking handle. Like I said, we saw this on August 20th, and we surged after 2 new all-time highs. So it's something like this potentially in the cards. Market looks like it wants to get back to 650. Again, all-time highs at right around 649.5. So very, very bullish. Let's see what pushed it today. Today they rotated big time into the metals. Let's look at the first one. Those gold bugs continue to be right. New all-time highs, the G to the L to the D. Look at this candle. This gold consolidated, didn't do a ton. We were talking about it today on the show, how the gold miner movement was consolidation and resolve higher was confirming to you that gold was exhausted, just needed time to do its thing, essentially just take a breather and I guess get fat. Went to a dog carnival this weekend, and a dog was on a carnival. And for some reason, it made me remind me of this. Yes, I went to System of a Down on Wednesday and then the dog carnival on Saturday. Typical. I actually wore my System of a Down concert shirt to the dog carnival. Anyway, so basically, what was the point of that? Fat dog on treadmill. Needed to take a breather. Duh. We're just weaving here. So basically, gold got fat on the treadmill, hasn't done diddly squat since April, but didn't really lose you a lot of capital. Basically hugged 308 for a long time, basically, for about 4 months, give and take 3% upside and downside. Not even in some cases. And now you finally got a breakout, eclipsing higher than where you were in April. With really strong bullish tape. You look at this, really no one was caring about gold. A lot of people were buying beta in the market up until August 22nd. Then you see these candles, and now this breakaway here up 2 1/3%. Now what? My full target, I've been a gold fan. I've been trying to buy GDX, more so GDXJ and GDX on pullbacks. That seems obvious. We'll look at those charts as well. Right here, I personally want to chase it. My full target here for gold was honestly about 320. So for me, this is a little bit stretched. You're getting vol expansion on the breakout, so I wouldn't personally short it here. But I do think in the next 2-ish weeks, some of the enthusiasm will go down, and this will revisit about 310, which seems like a big drop from here. What is that? 310, 15 points, so about 4 or 5% move to the downside. But that's probably going to be maybe later this month. You're going to have to be patient. This is a beautiful looking breakout here from 308. Really nice. It's just ping ponging here. 318 down to 290, and then it starts tightening the gap there. You almost see something like this in crypto. We'll take a look at that chart. 318, 299, 316, starting to get tighter, right? 300. 314, 304, pow. A lot of energy has to be expelled. And similar to what's happening in crypto. So we'll see how much this move goes. You're also getting confirmation here with RSI reaching 74. Love to see it. They probably do take this higher to 331 or something near term. I personally wouldn't chase it right here. I think you get a chance at maybe 310 to 315 in a couple of weeks. And the last thing on this, August 22nd. Yeah, I mean, I know it's seems like curve fitting, but there were a lot of, I'm just looking at the technicals here. I think I highlighted also on my last show, or one of the last shows before I signed off, the 22nd, there's a lot of predictability. There's a lot of coil spring there that was bound to give where it made sense for you to get long. Basically, I have a note here, August 22nd, get long GLD under 309 with a target of 316. So, good looking trade. I wouldn't, like I said, chase it here. Okay, enough on that. But gold, there's a lot of glory today, up 2.5% basically to new all-time highs. Congrats if you're holding. Next, this is really interesting to me. The XBI. I know. Why is it not coming up? Where is it on here? 1 sec. Oh, that's why. Sorry, my thing was later. So XBI. This is pretty amazing to me. Because I love catch-up trades. You can make a lot of money, especially in options, doing catch-up trades, especially in a bullish market like this. XBI, it was very hated, especially after the Kennedy news, becoming Treasury czar or whatever it is last year. And you could see really where that happened. Here was the election. Where was right here? And then basically it peaked the week after at 105. And then really he was saying, he's going to, I guess, flush cereal down the toilet with your toothpaste or something. And then it really started. That wasn't even the bottom here in November. That was $92. The bottom came with the U.S. stock market low in April. This thing plummeted all the way to $60 the devil's number, I guess, 66.66. And now it is just really starting to have a resurgence, just really as of August 14th. It is now holding above a still sliding lower 200-day moving average. So I really do need to see this hold $87 even. A beautiful looking candle today on, a rally in rates. So go figure. And also largely, this is what really I especially like. This is largely a very nice, strong RSI trading above, I know also a little bit of curve fitting, but above 45 RSI trading since May 16th. And there's a lot of worse places you can be. You can run that in your Python. There's a lot of other spaces that have been, chopping along under, let's say 45 for say 4 months consistently. XBI has been doing it after carving out that base around 79. 87, very important to hold. Personally, this is a very impressive candle. I want to see what it does over the next week and a half. If it was setting up, I'll tell you to set up. Hopefully we'll get into some setups here. I'm telling you not to chase gold right now, though it probably goes higher. Biotech, I would just wait for it. It probably hugs. I just think they're not done with it. I think it maybe has an ugly sell-off over the next week or so, down to maybe 85. I'm just not convinced it holds this 200-day moving average. I just want to see. And even if 85, it still could have this recovery in motion. But I do think it's carving out a nice base and consolidation. Still, there's better charts. Still, given what I said about the RSI trading, still, there's better trust for me, but I do want to see what it does in the next week. If it holds 87, then yeah, this looks great. And this is going to probably target at least 104, which is the prior highs. And obviously, that's XBI. There are a lot of biotech within that you could probably take, chase fundamentals and look at, holders like Baker Hughes, I think it's called Baker Brothers, rather. Like Steve Strazza was talking about this morning, and those guys have a golden track record almost. You can go in and find those companies, look at the holders in the XBI, and take some chances if you'd like in an all-time high market. Next one, USO. So these guys all had 3 or more sigma moves. So the gold, big move today relative to itself. Biotech, that's a big 3.5% move relative to itself. And oil, a big 2.5% move relative to itself. Oil peaked when we were, basically drinking champagne. I've read no one's buying champagne anymore because they're not celebrating. I don't understand. Saquon touches the ball in 2 days. Cahoots. But yeah, oil peaked in January, 84.5 essentially. And now I love the 200-day moving average, just flatlining here at essentially we'll call 73.5. You do have lower highs here. A nice day today, up 2.5%. Let's say, is there a setup in the near term? I think this has done a lot. To me, there was the buy signal on the 15th. I loved after that. I didn't think it was going to really go below 71.5. I wanted to see what was going to carve along here. To me, that was a buy signal with a target of most likely 75. Wanted to see if it hit its head and get to 76. Encouraging today, up 2.5%. It was a big commodities day. I still kind of think it peaked. Maybe it gets to 76. 7 over the next couple of days, but I do think this still wants to hug and go a little bit lower towards 74. I'm still not a huge fan of the energy story right here, right now. So far, everything that I've seen, I don't really love any setups. Let's go next. So those are the 3 biggest movers of the day to the upside. Losers for a day where, like I said, the market was down 75 bips. The Q's got it the worst, down 85 bips. There were no actual multiple standard deviation losers. TLT came very close. But it was not quite a multiple standard deviation loser. Rates did jump today. The TBT, which is a double leverage, so we're not even going to look at that because we don't cover that kind of nonsense. But TBT I do look at. But TLT was down 1.1%, which is a big move for bonds. I'll just pull it up really fast because it is a pretty significant move, and it did have a bit of a weight on the market. So here's TLT. There's very few, like I said, catch-up trades in the market. We were talking about Apple had looked awful, and now that thing's caught up. Small caps looked awful, now that thing's caught up. Solana, Ethereum, everything's gotten, like I said, every squirrel has gotten a nut in this market. So now I'm looking at TLT, which kind of has an inverse relation to the market because you don't have earnings. It's quite the opposite. TLT is not participating in the AI global story like the United States tech is. So bonds are a different story in terms of the so bad they're good. They're also likely cutting rates in about 2 weeks. So again, inverse relationship, bond price. Again, rates go lower, bond prices go higher. Will that help? Look at this from a technical standpoint. I think TLT has a nice week or so to go. I think this wants to go to about $89. I do think it actually tries to traverse and get above its 200-day moving average. Today down 1%, did not help its chances. 200-day moving averages that fall are usually, very hard to overcome, very heavy. It takes a lot of time, a lot of tries. It's not just you saying, I'm going to get a six-pack and I'm going to go to the gym 30 days out of 30. You're going to slouch. The consistency looks like this, and it's going to take many months to get you back on track. That's kind of what bonds are doing here, essentially. But nice higher lows here after the May bottom. Here you had $83, and then hit 84. Now is that where it stays here? We'll see. I do think it has a nice week, and it tries to etch its way to 89, possibly get above its 200-day moving average for the first time since April, when the market was in really bad shape. So we'll see. Bonds having a bizarre story. Next, top three gainers of the past 5 days. Killing it this week. If you've been in GDX, the #1 ETF, you rode it to a new 52-week high today. Look at this. It looks like the Space Needle in Seattle. That is beautiful. Up 2.5% to $65. Call it. I said today on the show as well on Spaces, it was just common sense. You buy this, and I said it on here, when this gets a 21-day exponential moving average, it's simple. And when it gets to the 50-day moving average, you really get much more aggressive. And that's basically how I've been trading it this year. And that's essentially this middle line is the 21-day exponential. And then the lower, essentially basically closer to the lower Bollinger Band, is the 50, is how I have it here. So it happened several times this year. That was giveaways. I know we're talking about January. This is not just a 2025 story. This thing has been a winner since last year. Personally, fully valued. I love this name. I've been talking about it. I write about it. But my full valuation right here is around 63. This thing can obviously continue to run. This thing continues to have great flows, great marks on close, meaning institutional buying during that essential vital 3:30 to 4 o'clock hour. I would just not chase it here. Maybe in 2-ish weeks, you get a chance of getting this around. I know it sounds crazy, but 59.5 or so. And then that's where I would, try and get the station. But this thing is overbought. They've been bidding this thing up, standing room only, like I don't even know what. But yeah, a 72 RSI since August 26th. So you're bidding this one up like it's I don't know, like a Dua Lipa, Taylor Swift co-headlining show. It's big time. GDX, it's bid up here. So I'm not shocked if the line continues to get longer. Eventually, in 2-ish weeks or so, I do think you possibly have a chance at 59.60, and then you get in. Next, but there's been crushing it this week. Gold miners, #1 story, up 7.5% this past 5 days, up 2.6% of that today. The #2 story, and this came from a viewer a question by a viewer last week. It said, has Nat Gas bottomed? Nat Gas, the second best ETF in all the land, up 7%, just behind the gold miners. So gold miners coming from strength, UNG coming from a place of the toilet, opposite of strength. This thing not near 52-week high. So was it a true bottom here on the 26th when we had that Chris ask? So let's see. You did not get oversold, so you had a divergence there, a bullish divergence there. So that kind of said that you weren't going to at least get a 10 handle imminently. I think this continues to have a nice run. Where to? This thing can be volatile to the upside. Today was almost flattening, down 40 bips after a nice week. You see these candles start to get a little bit smaller, but I think we hug around 1260 for a while. So maybe, down 1%, 2% downside for obviously a volatile product like this. But I do think it has a nice 1 to 2 weeks after that exhaustion here. I think this gets sucked up higher, as high as a realistic target of about 1360. So about, 90 cents or so to the upside. So, 25-6% up, which is, nice, but I don't think it is going to overcome the 50 RSI. I think it will still be underneath that as it has been since June 23rd. No change in sentiment or trend for that. I probably do see successive lower lows coming in this, but probably closer to maybe October. Okay, and then next, it's been a commodities week. If you've been, I'm not talking about semis to the upside right now. I'm not talking about crypto. We're talking about gold miners, nat gas, and silver crushing the week. Silver just behind those guys, up 6% on the week today, up 2 and almost almost 3%. A beautiful candle here, 52-week highs for silver. For all of those that were trying to get this on the catch-up trade, finally, you have gotten to 52-week highs. For me, great flows for this. I'd rather be in gold, but this is obviously a great looking chart. I would not chase it here. I do think in 2-ish weeks or so, similar to the pullback, as I stated earlier in gold, I think this pulls back to about when silver moves, it moves to the downside. I think you get a chance of getting this at about 35 even, so almost $2 off. So that's 5-6% or so off. So then I would get into this if you don't have any. And you're getting bullish confirmation here with a 72 nearly RSI. It has not been overbought since mid-June. So nice breakaways here. Beautiful looking chart. What can I say? Like I said, personally wouldn't chase it. Probably get a 35 handle entry in 2-ish weeks. But this tells me it probably goes higher near term, maybe possibly a 38 handle. Okie dokie, artichoke. Let me get some water. First day back after Labor Day. Tough out there. All right. Top 3 losers of the past 5 days. Speaking of tough out there, this is a kind of a weird ETF, as we know, in terms of the correlation to the underlying. But the worst place to be in ETF land, and we recommended crypto. I've actually, good point to put this out. I got significantly, up the stake in crypto through the form of IBIT. And I wrote about it, I believe, on either a LinkedIn post. Oh, it was also on an X post. And it was in IBIT last week, and I'm flat on it here. It's basically right where we got in. BITO has had a nasty week. Chart does not look good here. I think it's probably going to continue to try and base this week. It had a lousy day. I think this 19 handle should hold. It came to 1873 today, and they stepped in and bought it. I think that kind of behavior should continue. It's a lousy ETF, but it has a crazy dividend. This has a yield of 56% because they pay you, this is the thing, they pay you $1.20 every month. And then that's why the correlation is very different in terms of an IBIT. So I went IBIT. This is a little bit messier for me. But this has been the worst ETF in the past week, down 5% or an average of 1% a day, trying to reverse its trends today, up 2.3%. I think it has, after trying to base, like I said, with this 19 handle, I do think I've been talking about crypto, your year-over-year leader. We'll go over the year-over-year leaders at the end of the week. But I do think this has a nice 2 weeks for BITO. If you're along this hunk of junk, I guess you're loving the divvy. But I think this has a rally to 21, which is a big move, $2 over the next 2 weeks. But I don't like it. Like I said, this is probably not going to get above its 200-day moving average, which is 21.87. But you guys, if you're investing in this, you're in it for a whole different reason. So I wouldn't, if you want BITO correlation or Bitcoin exposure, this is not the absolute best way to go about it. Why am I talking about it? Worst place in ETFs over the past week. Number 2 worst place, and this actually is a lot better correlation to the underlying, is Ethereum. We had said what is going to take down, look at this God candle, and that is what it's called in the textbooks. I think that's what Steve Nyson was talking about when he was doing the rice patties back there in Japan decades ago. August 22nd, that's how I studied in the CMT books. August 22nd, up 15%. The RSI didn't get to 69. We said, look out, this probably gets to 31 soon, or, in a handful of a week or two. What happens after the handle touched nearly 37 a day? It was 36.80. We got to 32 yesterday or on Friday, and today 32 as well. Today down 1.5%, and we're still at 32. Now, what says we? So BITO, we said we like the next 2 weeks. What's going to go on? So similar with ETHA, I think this is going to try and carve out a base here. Why am I yelling? I think this is going to try and carve out a base here around $32. I love the risk. I think you're okay, especially in a high volatility asset like this. I love your risk here. I think 32. Now I see setup. I think 32 setup holds, 32 floor holds rather. And I think this gets a nice over the next 2 to 3 weeks. I think this tries to get to $36 to $38, which is $4 to $6 away. I'm 10% easy here. Love the trading. This thing's been really standing room only since July 1st or so, when really some data came into this, when you were able to form a 200-day moving average. It based here at ironically $20 even, like the computers plugged it in themselves. Now your support in form of 200-day moving averages back here at 22. I like it. Ideas that come out to me are 33, 37 call spreads. You can go out. There's going to be volatility obviously on this. Check the liquidity. You can go out maybe October. My target for this is probably closer to early October, so you could buy a month extra of time, maybe do like a Thanksgiving trade, but check the liquidity. That's going to be important. But I like this setup. It'll probably make you sweat and make you pay for it. Maybe it goes down to as low as $31 Maybe lower. This is volatile, but I do like this 7-year risk reward under above $32. It looks beautiful. But it's had the second worst week after BITO. And lastly, the third worst place to be, basically tech and large, but specifically semiconductors down 2.9%, the third worst place to be. So again, it was 2-1 in terms of the gainers. Gold miners, nat gas, and silver all up 6 to 7%. The losers, I had to squint to find, it was BITO, Ethereum, and SMH down 3 to 5%. Semiconductors, nice to see in terms of the all-time high back on the 13th. I was so glad that this, if you remember from last summer, this thing ping pong, like we were talking about the chart earlier about gold, fat dog on the treadmill for a while. This thing was doing 270 to 235 dance all last summer. And then finally, that was a new floor as of June. Sometimes it just takes a while, right, for you to work on your shot. The semis essentially did the same thing this week. Lousy down 3%. Look at the zig zag. We're getting a W here with equal bottoms. You're getting this 280 bottom. Same thing it's done since July 8th. So you're having your hot dog on July 4. Boom, 280. Boom, 280. Boom, 280. Boom, 280. Now what? I think you're getting this on sale. I love your risk again. Under 293. To me, I like it here. It might make you wait for a while. This might be a longer digestion here. I don't love that we're at a 44 RSI, the lowest it's been since April. So folks don't really want to kind of touch us with a 10-foot pole, and possibly, it does go lower. But I do think this tries to ascend towards about right around 300, if not new all-time highs. The all-time highs at 303. So I think it tries to do that in the next 2-ish weeks. Market to me is still uber bullish. Just some consolidation here. I like the floor here at 280. Possibly the same kind of activity happens. You're seeing the Pong activity like from last year, that range that we just have talked about. Maybe the new range is 300 to 280, ping pong. And similarly, when you had to gold, when you have that breakout above and it closed at 305, we zoom higher and it takes S&P to 7,000 into year-end with the window dressing, all the chasing that you'll get from fund managers that don't want to lose their jobs. Top 3 trades of the past 5 days. If you've been long GDX, nat gas, and silver, basically snorting all kinds of commodities, congratulations. You're as good as Saquon Barkley with a football, maybe. Probably not, though. At trading, I guess. I will be back very soon. We'll do single stocks where we'll cover what's going on there. Good to be back, and we will talk with you, I think, tomorrow.